Bum, 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 ba-dum. GameStop's going to the moon. Oh my God, I was so wrong. You don't need to buy an index fund, just buy meme stocks. Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I'm having a wonderful day. It's Friday, sun's out. I'm working in an office. I have my own office, by the way. Doing taxes when I could be at the beach. But it's okay. Tax season's over in 2 weeks. But the purpose of this video is not to talk about my personal life, even though it's very, very interesting. We're going to talk about the recent actions taken by GameStop. They are corporate officers. Now, what did GameStop do? Well, number one, the stock exploded in the pre-market this morning and as soon as the market opened. And you want to know why? It's the same thing that Tesla did. Our genius meme stock Tesla investors. So GameStop is planning to do a share split. So they're going to bring it to a vote to the shareholders. And they're going to do some kind of share split stock dividend. Now, I want to remind you guys that a stock split literally does nothing. It's not dilution because everybody gets a proportional percentage of the stock. Let's say you have one stock, you get two. It's not dilution. But it also doesn't do anything for the company. They don't raise cash by splitting their shares. It literally doesn't change the valuation of the company at all. Think about it. Just think about the transaction, okay? You have one share, and now you have two. Did the company double in value? No. Your share is just worth 50% less. But you clowns don't understand that. Now, I went ahead and read the, I think it's called an 8K, the 8K filing made by GameStop. It's really short to the Securities and Exchange Commission. And they have some very interesting stuff on there, okay? It's a very short statement. But basically they said they currently have 300 million shares authorized that they can issue. And with this new amendment, they want to be able to issue up to 1 billion shares, okay? Now, the overt purpose of this is to just split the stock, bro. Because if you split a stock, it just goes up and people buy it. But there's also a tiny little line in that statement. And you can go read it yourself. It's a very short statement. But in the statement, they said they also may use it, and I'm paraphrasing here, for needs of the corporation. What do you think they're going to do? Okay. They're going from 300 million authorized shares to 1 billion. That's a huge increase. Now, some of that may be stock split, 100%. But they're also probably planning to dilute you frickin' clowns in a massive way. Truly dilute you by issuing new shares, okay? Now, just to review the different classifications of shares, okay, you have, for common stock, you have authorized shares, which is in the corporate charter. The charter says you can issue, you can create, give out this many shares. So currently GameStop has 300 million shares. Now, when you issue a share, that's when it can become traded by the public, okay? And that's when, you have common stockholders are entitled to dividends, yeah. And then you have outstanding shares. So a company can give out shares, they can issue them, and they can also buy them back and put them in what's called treasury stock. But just because a share is issued does not mean it's outstanding. So really the only shares that are held by the public are outstanding shares. Usually you'll see issued shares a little bit higher than outstanding shares because sometimes companies buy back their stock. And they do that to, reward the investors. So you got to look at GameStop critically, okay? It's a freaking clown company. Go look at the income statement. They haven't been profitable in the last 3 years. They've been losing money hand over fist on the accrual basis of accounting. Then you go look at the statement of cash flows. They don't have any positive free cash flows. And I think they only had 1 year over the past 3 years, 2 or 3 years, or even more, where they had positive operating cash flows. So basically every year leading up to now, they've been losing money from operations, which is freaking horrible, okay? Now, if you're losing money from your business operations, how do you raise cash to sustain yourself? Well, you have investing activities. You could sell some of your property, plant, and equipment, your store, well, in this case, they're stores, to generate cash to survive. Or they could go into debt, financing activities, or they could issue more shares. So looking at GameStop, they're losing money on the operating section of the statement of cash flows. And unless they start selling stores like crazy, they're going to have to do something else to raise money. And what do you think this stupid freaking thing is going to be? They're going to go ahead and they're going to dilute you once they get the approval from the shareholders to increase the amount of shares that are authorized. That's the whole game behind this, okay? You might get a 2-for-1 share split or stock split. Now, I think they have like 79 million shares issued and outstanding as of right now. So if you get a 2-for-1, okay, that's what, 160 million shares. That's still a lot less than a billion, okay? So all those other shares that are authorized, they could very, very easily issue those to raise cash. And you stupid idiots that love GameStop, you will buy the shares because you're so dumb that you think a dying gaming company is going to make you wealthy. Now, I don't know the percentage of short selling that is on GameStop. I don't know if it's as high as AMC, but I'm just here to tell you, it's a freaking joke. So if you're watching people like Keenan, who's a total freaking idiot, okay? That guy is a moron. He literally just looks at stocks that go up in the near term and says, buy those stocks! You even made a video about Baba. It's like, oh yeah, you understand Baba, you freaking clown. If you're listening to guys like Keenan, whoever else pumps GameStop, I don't know, trades, I don't know if he talks about it or if he just talks about AMC. Whoever's pumping GameStop and is reacting positively to this, you know, this news that this 8K that GameStop filed with the SEC, you're an idiot. They're going to dilute you 100%. It is inevitable. If you cannot generate positive operating cash flows, what you do in your business, if you're losing cash every year, you got to raise money. Think about it from a personal perspective. Let's say you have a checking account and every year you spend more than you make. Well, the checking account's going to go down and down and down and down. And how are you going to get money? Okay, you could sell stuff in your house. You know, you can call that investing activities. Or you can go into debt. Or you could do what companies do and I guess, you know, get equity. You know, issue more shares, which you can't do as a person. Would you like stock and strong, man? So just think critically about it, okay? GameStop is hot trash. AMC is hot trash. All these stupid meme stocks, including Tesla, are hot freaking trash. If somebody announces a share split, it doesn't mean jack. It's a freaking joke. And it's probably just a closet way for them to issue more shares and dilute you. Actually dilute you. I'm so sick of you people. Anyway, back to work.